Hello, welcome back. It is Monday and we are all buzzing about the Bitcoin spot ETF. Everybody's saying it could be approved today. Everybody's thinking it could be by Wednesday. So lots of buzz. The market is showing very, very bullish indicators of this being approved. So I wanted to dive into what's going on with this ETF approval and what's actually being discussed, because I know that when you're dealing with government, this stuff is all actually public information. So we're all sitting here talking about opinions of whether it'll be approved or not. And so I wanted to dive into a couple of things that they're talking about, and you can kind of decide for yourself if you think they're getting close to this approval or not. So a couple of items that they seem to really drill in on are the fact that this crypto market is a $4 trillion a day market. So they're really looking at how to mitigate and protect customers. But it also deals with how the customers are going to have to proceed going forward in the crypto market. So a lot of it has to deal with fund clearing and treasury cash clearing, as well as bank clearing, because all of those are separate aspects in this. So we've got the treasury clearing of large funds, the bank clearing of funds into your account, fund clearing onto the central exchange. This is a lot of money being exchanged, and they have to really document how this is going to be captured, who's going to be held responsible, all of the ins and outs of this. So if you've ever worked in getting a project passed through government, you'll know that it's not always very simple. And sometimes you can think you're getting close, and then they'll find something else that they didn't quite drill in on enough, and they need more clarification. So there are many, many opportunities for this ETF to be approved. But again, if they don't feel like they're there for getting this passed, they're not going to pass it prematurely. Once it's passed, and it's harder to get something in as an amendment. It has to then go up as a bill and go through all of the typical routes to be approved within the government. So they are wanting to make sure that it captures everything that they need to go forward. So and there's multiple people that are involved here. Okay, right? People in government they're going to get paid. People that are part of the central exchanges, they're going to get paid. People who are trying to get the ETF approved, they're trying to get paid. They're all trying to figure out this contractual business agreement. This is basically a business contract between a public-private partnership, in my opinion. But I guess we won't call it that, because that's probably not something I should say on here. But let's dive right into it. So compliance number one that they wanted to do is the clearing agency, which is the separation of the house funds and the customer funds, how they're going to calculate that, how they're going to track that, and how that is going to be separated out for both parties to have proper documentation. In addition to this, I'm calling this third-party access, because it's basically like opening the back door for them to be able to see into your accounts and everything that you got going on in there. Because it's also going to track all of your secondary market transactions. And so where I can see that being the backdoor access is, well, although I give you access to my crypto.com account, anything else that you do from there is then also going to be tracked downstream. So although we know blockchain covers this and it's all well and truly documented, I just feel like this gives another available access point for somebody to be able to use. The second part had to deal with broker margin. And this has two parts of it that has to do with the cash side as well as the repo, aka margin side. And so they break it down into two separate fields, but then they also have this Rule 15C33. Rule 15C33, they discussed in great detail on the Part A. Part A being the margin required is going to be slightly higher higher with crypto going forward than it has traditionally been for stocks. So the margin 1-for-1 on deposit is as well as what the customer reserve formula is that they're going to be coding in. So the customer reserve formula, aka the retention that they're going to keep from your margin trades, is going to be higher than it would on a traditional stock trade. Now, the reason they're saying they need to keep more of the money that you make off of your margin trade is because crypto is such a volatile God, I can't think of the word. It's such a volatile asset class, and the market cap is so high. So I don't really know that I agree with the fact that they're trying to justify the volatility of the market when they already have the ETF or the ETH futures that you're able to trade on. So if they have that approved already and that's already super volatile, I don't think that they should be utilizing this as a reason to take more of your money is essentially what it is. And so I don't really like it. It doesn't feel good to me. But also at the same time, a lot of these things feel like they should have been things that were figured out already. So I'm going to go ahead and say, I don't think Gary Gensler is going to approve this. I think we're all bullish, and I think he's not ready to approve it. And also, they didn't really discuss the Part 15C 33B, which was something else that they'd made some amendments to. So I'm going to dive in on that, but I want to know in the comments, let me know. Please like and subscribe. Pump this out there to the world because I want to know what your guys' thoughts are. Are we getting approved this week or not?